All right, let's roll. Hello, everyone. Good morning, good afternoon, good evening, and good day to some of us, regardless of where you are going to be watching this stream from. I am Javan FX right here on YouTube. All right, trying to help the community. Okay, just the way I've been helped. All right, okay, so right here on YouTube, I'm sharing forex content, okay, educational forex content with anyone, with everyone that is fully interested to learn the skill of this business. All right, so for some many weeks now, I've been dropping some, just a little bit, just tiny, of the forex course 101 right here on YouTube. And my goal, my business is to share more and more to all of you guys out there. Okay, so today I want to be talking about something that is called how to know which uptrend and downtrend highs and lows that are relevant, because in this business it is not every highs and lows that we see that are relevant. But first of all, in my first video, okay, I talk about monthly support. All right, right here, monthly support band areas and monthly resistance band areas. So as a beginner, we must and we need to have the monthly support and resistance bands on the monthly chart. Okay, they are not lines. Okay, now for example, right here I am using this line, okay, but they are not lines, they are areas. Okay, monthly support resistance bands are areas, they are not line. But for this example, I'm going to be making use of these lines and this line right here as a monthly support band area. Okay, so if you're interested to know more how to draw perfectly well the monthly support and resistance band areas, stick with me, and I'm going to be sharing a video on that, on how to do just that. Okay, so if you have actually watched from my first video, second, third, fourth, I think, up to the fifth videos, because this is the sixth video I'm going to be making right here on YouTube. All right, and this is the forex course that I'm trying to share with the public, so that beginners who have the interest, who want to learn the skill of this business, can, okay, learn in the proper way, in the correct way. And that is what I'm here to offer. So one thing I want us to know first of all is that forex business is like every other business. Now think about what business you are doing in your country. What business is there in your country that a lot of people are getting involved into, or different kind of business? Think about it. How do those people, how do they become professionals in that field, in that skill that they have learned, they've acquired, and they are working with it and they are making money from it? How did they, some people, in my own opinion, some people have this desire to learn whatever skill that they are using to make money, to feed their family, to make ends meet, to pay the rent, to pay the bills. They have this love, this desire for that skill, and that's why they decide to learn that particular skill. All right, why some people, some other people, okay, for one reason or another reason, they decide to just choose to learn a particular skill, okay, a particular craft, so that they can use it to make money for themselves, maybe extra living. You understand? So the forex business is also the same way. But today it is a pity that a lot of people like me back in time, we were made to believe that forex is a business, is a skill that you can acquire easily in less than 3 months, 2 months, and you can just start making money with it as fast as possible. But the bottom truth is not like that. Forex business is not easy. So I'm going to be honest with anybody that's going to find this video, okay, and that is going to watch this video. Sorry about the noise, guys. My neighbors are working, I don't know. Okay. You want to make sure that you take the time to really meditate, understand what you want to do. Are you really sure you are interested in learning this skill? Are you really sure that you really want to acquire this skill? Because, like I say, if you don't have the desire, if you are not determined to have this skill, it will be impossible for you to make money with it in the nearest future. And one thing I'm going to also say is that the forex business is not something you make, you can learn in less than 3 months and you start making money from it. It's not possible. There is no business on this planet Earth that I know, okay, that one can acquire in less than 3 months. I don't know, maybe there is, but for a business like this, you want to really have a skill, a good skill out of it. Okay, I think you need a minimum of 2 years. Yeah, 2 years. Before you can now start making money, you need at least maybe 1 year. So that means in all, we're talking about 3 years in all. If we take a look at those that go to college, they go to learn a particular skill, a particular course in college. How many years do they spend? Some of them spend 3 years, like complete 3 years before they graduate, and start going out to look for a job. And after, graduating from college, it might even take sometimes 6 months, 3 months, depending on the economic situation in your particular country. Okay, in some people, it takes them up to a year before they get a job after learning their course, after graduating from college. For they take up to a year before they finally get a job. And for example, somebody that studied a particular course for 4 years, before he could finally get a job, it'll take him or her up to a year. That's altogether, it's 5 years. Imagine. But in that scenario, in that area of looking for a job, and that depends on the economic situation of that particular country at the time. Maybe there is a shortage of job, or maybe there is more job, I don't know, But whatever skill, my point is, whatever skill you want to learn, you need a minimum of 2 years to learn that skill. And Forex too is not exceptional, it's the same. Yes, the Forex course, we have the technical part that is going to cost you at least 6 months, or depend on now how fast you learn. Somebody like me, I'm a very slow learner. So in my own case, it took me up to 1 year to learn the Forex course. Okay, talking about technicals, and another 1 year to learn the psychological part of it. Yes, because we have the technical part, we have the psychological part of the Forex business. Okay, the psychological part talks about emotions, because this business is highly emotional driven, believe me, guys. So that is all it needs to go on in this business. Okay, in case anybody is watching me and right now, and I can't access a comment you drop, in case you drop a comment, I'm just going to try to see if I'm going to see any comment. If not, I'm just going to move on, because I'm not really skillful in using this platform. Okay, so in case, all right, okay, let me quickly say hello right there. Okay, let's get back to the stuff. Okay, right here. Okay, so like as I'm saying, we need at least a minimum of 2 years. And like me, I spent 1 year in learning the technical part, 1 year for the psychological part, and now I think I'm good. Okay, so I actually spent one extra year actually before I started, learning in the correct way. I was trying to learn the business by myself, watching videos on YouTube. I spent 1 year, nothing. So basically, how many years have I spent so far? 3 years. Okay, in total, 3 years before I'm able to arrive at the stage that I am right now. Okay, and it's an ongoing process because I'm still studying. All right, so today, lesson 6 that I'm sharing today talks about how to know which uptrend, downtrend, highs and lows that are relevant. We are going to be using the daily chart, NZD USD, to be looking at that scenario. Wow, this noise is crazy. Sorry about the noise, guys. So back in time, NZD USD right here, we can see, for example, okay, let me do this. All right, so NZD USD right here back in time, as we can see right here. So the market was going from the upside to the downside. So which highs and lows that are relevant? In my previous video, I think in the second or third video, I talk about how to identify highs and lows. Okay, so if you're just watching this video and you want to know about that, please check my video from lesson 1, 2 or 3. You're going to see where I talk about how to identify highs and lows. But in this case, we're looking at these highs and lows that are relevant, because not all highs and lows are relevant. Okay, so right now we have a downtrend. Okay, we have this, for example. Let's just take a look at this back in time. This is the daily time frame, right? Okay, so right here, all right, so right here we have this lower low. This is not a low. We have a lower low here, we have a lower high here, and we have a lower low down right here. Okay, I'm gonna make it thicker and change the color to black. All right, so this was the downtrend we have back in time right here. You all agree with me? Okay, now this is the downtrend. Okay, I'm still going to be talking about downtrend in the nearest future, not in this video, how to properly draw trend lines. Okay, now in this scenario, we can see that this market right here, all right, this market right here, yellow and yellow. Okay, let me reduce the color. All right, and like this. Okay, this market right in here, we can see that we have a short-term uptrend inside right here, right? Higher highs, higher lows, higher highs, right? Now, back in time, you and I would have been buying this market on the smaller time frame. Okay, back in time, you and I would have been buying this market on the smaller time frame, right from here, and that is going to be green, right? Yeah, green. Once this market makes this bullish candlestick formation on the smaller time frame, we are going to be buying this market on the smaller time frame, hopefully on the 1 hour chart, for example. And now we are going to go on the 1 hour chart and we're going to see how this played out on the 1 hour chart. Okay, right here on the 1 hour chart, NZD USD. Okay, let's go backward in time, and hopefully, I don't know, maybe TradingView is going to give it to us, but let's try. Okay, let's try. If I don't, okay, this is not a paid planned chart, so I guess I have to go to use the paid plan chart. Okay, let's quickly go to the paid plan chart. So, and let's make this analysis right there. Okay, right here. So while the chart is trying to come up, let me quickly, I'm thirsty. Okay, let me quickly drink water. All right, so we are here. So I'm just going to, Okay, let me leave this for now. Okay, we are here. So we're going to go to, okay, the news is out. Alright, so it's going to sell when it's ready. The market is going to sell for sure. Okay, where is that NZD USD right here? Okay, daily chart right here. Alright, this is the daily chart. So we are looking at this area, right? Alright, here. So this is the scenario we are talking about right here. This one. Lower lows, lower high, and lower low, and change to black. And sorry. Alright, so this is the circle, color green. Alright, so we're gonna go straight all the way to the 1 hour chart right here. My internet is fucking driving me crazy here right now. Let me see if I can close some of the windows. This one. Alright. And let's go all the way back in time. And let's find the chart. Okay, where are you? Alright, we're going to find it. Man, I really don't understand why this noise at this time. Really? Where is the chart? We didn't get it. Whoa. Unbelievable. Alright, it's okay. We can just use another one. Okay, I want to use the daily chart as an example, and we can look at it on the, so this is it, but we can't find it. I don't know. So let's take a look at something else. For example, let's see. So this is the current market right now. Alright, let's take a look at the current market. Let's use the current market as an example. So what am I going to do right here? I'm going to close everything. Alright, okay. So back in time, we have this scenario right here on the daily chart. Okay, so we have the lower lows, lower high, and we have the lower low here, we have the lower high here, and finally lower low, right? Okay, now excuse me guys. Okay, right here we can clearly see the market did lower lows, lower high on the daily. Now, do we have is this low relevant? This low right here is relevant, okay? Color green. So this low here is relevant, right? What about this high? It's also relevant, right? Good. But let's not forget, we are looking for a downtrend that the highs and lows are relevant. Okay, so these highs and lows that are relevant, we want to see a short-term trade in these highs and lows that are relevant. Yes, a short-term trade. Okay, now this is a downtrend. this is a complete downtrend. Now this, we cannot see a short-term trade on this, okay, low and high. We cannot see a short-term trade in this low, this relevant low, and this relevant high. Now what makes this a relevant low and makes this a relevant high? It is because the market, okay, after making a low, makes a high, went all the way down to make a new low. That makes this low a relevant low. All right, okay, in this scenario, this one here right now. But if you take a very close look at the next, okay, the next market movement right here, you see that there is a very big difference in this first circle and this second circle. You see, there is a difference in the two. Now this low and this high are relevant, okay. This low rather, this high, this low, and this high, okay, are relevant. Why? Because we have a short-term trade inside this second circle, okay, this orange circle. We have a short-term trade inside of this highs and lows of this downtrend, okay. Now you guys want to take a very close look at what I'm doing here right now, because this is one reason why somebody like me back in time lose money. I make pips in the market, I give it back to the market. I make pips in the market. As a matter of fact, I make very little amount of pips in the market and I give a very huge part of it all the way back to the market, and that makes me to lose more, and at the end of the day lose my account. Okay, now this is a downtrend. This low, okay, now I'm going to take out this orange line, okay, I'm going to take it out, and now we're going to concentrate right now on this short-term trend. Okay, let's not forget that the major trend is down, okay, from what we can see here right now. The major trend is down. We're talking about this, okay. This is what we are looking at right now. All right, but in the middle the market made a short-term uptrend, all right, right here. So let me quickly bring out something. All right, so the market made what? This, okay, right here, and this, and this, and right. So okay, that's what we have right here right now, as we can see. Now the market overall, from the example we are making right now, is down. Back in time the trend was down, confirmed downtrend, but right here we have lower lows and lower high, right? But this is a short-term trade that we have inside this down market trend. Inside of it we have a retracement. So this is what is called a retracement. In another vocabulary, can be referred to as a correction. Okay, it can be referred to as a correction. A retracement is referred to as a correction. Okay, so the market at this point in time, inside this confirmed downtrend, started making higher highs, higher low, and higher high. right here. So we're going to make this color to be, come on man, yellow. So you can see, so once this market made this short-term uptrend, we can buy this market on the smaller time frame if we are skillful enough. But for forex beginner analysts, traders, it will be dangerous for us to buy this kind of uptrend. Yes, very, very, very dangerous. Why? Because the market is in a downtrend. Why on earth are we going to be short or buying a downtrend back in time right here? Okay, we don't see the future. Okay, so this is where we are back in time. For example, okay, we don't see the future. This is where we are. So for me, it doesn't make sense for us to be buying this market back in time right here, because we see a bullish candlestick pattern right here, and then we're beginning to buy this market on the 1 hour chart, on the 15-minute chart, on the 30-minute chart, on the whatever time frame that is smaller compared to the daily. Because the market, as we can clearly see right here, just made a lower lows, lower high, lower lows. So in my own humble opinion, what I will be expecting is, I'll be expecting more sell. So I will be looking at market coming towards this area. Okay, past resistance right here. That is what I will be looking at, in my own humble opinion, to short the market. Instead of buying this market, I'll wait peacefully, hold on for the market to come towards this level of past resistance, then I'm going to sell the market. Because as a matter of fact, the moment I see this short-term uptrend on the smaller time frame, I'll be happy, because this bullish candlestick formation is going to be a short-term uptrend on the smaller time frame. Now, this short-term uptrend on the daily, as you can see here, we're on the daily chart. Okay, this short-term uptrend, in my own humble opinion, I'm going to consider it as a retracement of the down market structure. Okay, I'm going to consider it as a retracement of the down market structure. What do I mean? So I'm going to have extension, higher highs, higher lows, higher highs, retracement. All right, that is what I'm going to consider it to be. And I'm going to be looking for opportunity to short the market instead of buying the market. Now, what makes this market here and this circle here to be different is that this circle, this second circle here, this orange line here, it has a short-term uptrend inside of it. And this one did not create a short-term uptrend. It just only created lower lows and lower high, lower lows, and we have a short-term uptrend. So the topic is how to know which uptrend and downtrend, highs and lows are relevant. So right now, this low right here, okay, this low right here is more relevant, okay, more relevant, and this high here, okay, is also relevant. Why? Because we have a short-term trade inside of it. Because we have a short-term trade inside of it. So this low here is more relevant, and this high is also more relevant compared to this one. So I'm just going to draw a circle, okay, and this low, I mean this high, this lower high and this lower low are more relevant than this lower low and this lower high. Why? Because we can see a short-term trade inside this downtrend, this confirmed downtrend that created a low and created a high. We can see a short-term trade inside of this short-term downtrend. That's why this high and this low are more relevant compared to this one and this one. Now, why? What is the real major reason why? Is because when we are looking at market structure, okay, the market structure has a borderline where market is going to retrace at that area. For example, that is what we are looking at right here. Because back in time, we have, for example, right here, we have a extension, we have retracement, and we have an extension right here. Okay, just like what we have here, all right, it's the same scenario we are looking at right here. In this case, in an uptrend. So at this point in time, this low right here has been broken by this low right here. So how do we go about the market structure? Okay, how do we go about the market structure? So previously we have extension, we have lower lows, lower high, lower lows, and extension. So this is a retracement back here, and now we're having the same scenario too. Extension, impulse, higher highs, higher low, higher highs, and extension. So we have extension, retracement, extension in this scenario back in time. So those relevant highs and lows, that is where we see a short-term trade for buy and for sell. So once this market starts making higher highs, higher lows, higher highs, okay, it's going to be a very easy way to just go in this manner, trend line break, okay, on the smaller time frame, and we're going to short this market. This candle is going to be what we are going to short, and take profit target also is going to be just right here, and we are out of the trade on the smaller time frame. And my friends, believe me, that is as easy as anything. And if we want to sell this market as early as possible on the smaller time frame, okay, if we enter the market at this level on the smaller time frame, the very, very right place to put our stop loss is right here. And we can see how the market came all the way from here, okay, take us out, we are on red, and start going up. And from that level, it started pushing all the way down to this area again. And now the market is pushing up gradually because of a news event, hopefully. But long term, this market, as we are looking at this market right here, before you know, the market is going to drop to the downside. Because right now, on the smaller time frame, the market is in a downtrend. Although the market right here on the daily time frame right now is in a what? It's in a uptrend. We can see it broke this high, so we can see the market making higher highs, higher low, and now we have higher high. And now the market made a lower low right here. So we're going to see lower lows, lower high, and lower low to the downside on the smaller time frame. So the topic for today, once again, my friends, is how to know which downtrend, okay, and uptrend highs and lows that are relevant. Okay, so a highs and low, a downtrend that makes a highs and lows, we want to carefully watch if we can see a short-term trade in that downtrend. Okay, the highs and lows. So this low here and this high here, we can clearly see a short-term trade inside of it before the market went to the downside. And previously, we can confirm that the market was in a downtrend back in time. So this high and this low, in all time frames, we are going to see all of these stuffs are very, very important when it comes to market structure. Okay, so if you are looking to trade the market structure, this is how you trade the market structure, and your stop loss must go to the pattern traded previously. So if you are selling this market back in time and you decide to enter the market here for sell, and your stop loss is here, okay, guess what? You would have been taken out for real. But believe me, if you watch this video time and time and time and again, in the nearest future, you're going to see that what I'm saying right now, this stop loss here, it's going to be standing. The market is never going to come here and take this stop loss out on the daily time frame. No, we're going to see the market going to reverse, and before you know it, it's going to start selling to the downside. And let's not forget that the weekly controls the daily, and the monthly controls the weekly, the daily, the 4, and the rest of the other time frame. All right, my friends, thank you very much. So this is what I have to share with you today. Hopefully, maybe tomorrow, maybe some other time, I'm going to be dropping lesson 7 of my course that I'm sharing right here to the public on YouTube. I hope this video is going to be beneficial for you, and you are going to make a very good use of it for yourself and start approaching the market in a different way compared to the way you have been approaching the market previously before. All right, thank you very much. I appreciate all of you. I remain your humble J Van FS right here on YouTube, and from me to you, it is bye bye for now.